right, how we doing? Sam here with you for an update by request from our members for a look at the S&P. So I've got the daily up here just to do a quick review back to the '09 lows. Now we've looked at this several times. So we've got all the ingredients for a potential major top to be in place. And it's hard to argue with all the subdivision is there. What has created the potential for maybe an alternate account here or more of an extension. I think the 1, 2, 3, and 4 is solid, but there's a case for this to have just gone 1, 2 because now I know you can't see that, but just to make this point here, here's what anyone looking at the algo plays are recognizing here. From swing low to the pivot that we put in here, we came down to the perfect 50. So it's a little bit, let's get that down, sorry. So it's a little bit unclear. Now, I suppose there's a possibility that this could get relabeled, that we'd end up putting the 3 up here. We're not ready to go there yet. This is the symmetry of this count of the 1, 2, 3, 4, 5 is so good that, until we break that top, I think you have to lean more into that we're still in mid-correction. Now, if that is the top, you'd anticipate a move back down to the 50. So it's, right into this prior 3, 4 here. So a move down to here, that would be your expectation if we've got this correctly identified as the completed impulse. Here would be your buy zone. So we've got a pretty fat range. If this is going to come down here, this is going to need to get certainly more complex. Now let's go take a look at it, knowing that that's down here. Excuse me. Now let me clear some of this off here so we can get a better look at it here. So let's go to the 4 hour here. Now one of these I want to get off of here. So bear with me a second. I want this one. Okay, yeah, there we go. All right, so that's the smaller. So of these two, now let me go into where we are here. Now let's open this up so you can see this a little bit better. Okay, so I'd like to think that certainly any members watching this recognize we've just come into this prior supply area here. I mean, this has been tagged multiple times. Now there's a few things to note here. So let me get back here so you can see this, because this is an interesting comparison. So if this is the big 5 up here, so it'd be actually right here, and we've come down here, we've got a nice A, B, C. Well, you say, well, look at the depth of that. Well, what could that be? Well, take a look over here. This is not that dramatically different. In fact, there's some real commonality here. So if I look at the prior wave 3 pivot, I go down to the low here, we get just for this B here, for this ABC, into the B high, we get just a bit through the 786. We'll take a look over here. If I do the exact same thing, swing high to swing low, we've just done the exact distance. Oh, pardon me. The exact percentage difference on the retrace here. So from that pivot to the A low, this B just a few beyond the 786. We've just done the exact same thing here on this pivot that I think is now 2 days old. Plus we combine, interestingly, take this all the way over. Right, this starts to, we fatten it up just a bit. Clearly, we've got a zone here that's worth paying attention to. So 1, 2, 3, 4, 5, 6. Here's the resistance. Now it's the support. Now we're back to resistance. Clearly, if we get through, that will be the support coming back down. But we're not through yet. Let's not get ahead of ourselves. So this whole area up here, this 2785, call it 2800, just for rounding purposes. Clearly, that's where supply is coming into the market. So having that established, now let's go down into this subdivision here, see if we can make sense of it. Now the retracements have been relatively shallow on the larger degree, so it becomes a bit of a judgment call. Let me clear some of this off of here. So what are you going to use here? So right off the bat, you have a problem as to what's the 1, 2. And I think the best way to approach this is just use your fib relationships to help guide you. So if that's the 1 and that's the 2, well, 1, 2, I can get the necessary subdivision to get me here. Here's the high probability zone for my third. That's right where we go. So from of this degree, the 1, 2, 3 here, and to some degree, you back into it because there's only so many pivots we can consider here. So if this is 1, 2, so of course, at first glance, you want to put the 1 here. But I think, in fact, given what we see here, now note additionally what we did here. Here's the 2, 6, 1. I mean, we didn't quite tag it, but we're coming up to an extreme for the 261.8 off the length of the 1 projected from the 2. That's definitely an extreme for how far you might anticipate that going in an extreme. So because I've got this perfect tag here, then it becomes a matter of kind of backing into that. So does that work as the 3? Well, I can get the subdivision here. So just staying with that idea that we're going to use these fib swings. Let me get that, tighten that up here. I'm going to use the fib swings here. So if I go 1, 2, 1, 2, well, for that here, I just make, so here's 100. I just make the 2, 7, 2. Not that crazy, but then I prefer this because of the ABC that I get here. So I get a little truncated C here, and then I can get the subdivision to get me up into that 5. So interestingly, note we get an extension in this 5, and it would appear we're getting a following extension in the 5 here as well, assuming this is correctly labeled. 1, 2, 3, 4, 5 into the 3. I get a kind of an odd ABC, but it's there. Now, it would be shallow. So if we look at this relative to this 2 low here, if this is the 2 and that's the 3 here, well, we get a perfect 23.6 here on the retrace. So I can get an ABC. Here's the algo target. They're through. Now, they're not through second target. So it's, is this a front run? Hard to say, right? Because we don't have an exact pivot. Excuse me. I'm so sorry. 1, 2, 1, 2, 3, 4, 5 into a 3. There's the 4. Now, this plays, it's pretty technical here. So if I go from, if I've got this as 1, 2, well, let's just check that. So I go 1, 2. Now let me go, hang on, let me open this up a little bit so we can see this better. Okay, so if that's 1, 2, I go 7, 8, well, let's get it up here, 7, 8, 6. Now we know the negative 100 is a good shorthand for the 1, 6, 1, 8, 1, 7, 5 range. Now this has gone a little deeper for a 2, but certainly valid. Right? So we've got a 1, 2, 3. So if I just take the length of that 1 projected from this 2, well, here's my high probability zone. So we got through it here because of the depth of this 2. So 200% the 1, that's not eliminated. So what are your alternates here? So you might think, oh, maybe there's the 3. This would be a shallow 4, and you want to put the 5 up there. So you could certainly have been thinking that at that time. So that would complete this 5. This would not be a deep enough retracement to be correcting that entire 5-way structure. So you have to assume that that's incorrectly labeled because of the ongoing move that we have here. Now I can play this as a 1, 2, 3, 4, but I've got to allow for this extension in the 5th. So we hold, if this is correctly identified as the 1, we don't threaten here. So I get a technical pivot here. So 2 to the 3, 50 to the tick. All right, so here's algos having their way with it. Right, boom. There's the classic algo play, and then they've done it multiple times in here. No surprise, algos are all over the place in here. So let me get to a 30-minute here. We can look at this a little more detail. It's been incredibly technical, right? If you want to go look for algos, Forex and the S&P, you're going to find them. Well, you're going to find them everywhere, but they're just rampant in here. So 2 to the 3, we get a perfect tag here, perfect algo play, but it keeps going. So I know I've got a technical pivot here. So knowing that, I can pull for this 1. Now this is shallow for a 2, but given what happens after it, let's zoom in a little more here so we can get a better look at it. So you don't really have another choice. That's the deepest retracement along the way until we get to this. So what's the alternate? Well, you got to check multiple pivots here. So I go up to this potentially. That's the 2 of the 1 here. And I can see it again. So is this 1, 2, 3, 4, 5? Hard to say. Could that be the 5? Maybe the 1 is over here. It's a little dicey here because of this chop that we get up here. But I can get it. So I can get a 1, 2, 3, 4, 5 into the 1. So here, this could be the 2 here. So here's the 50. So of course they're getting it again. They actually got second target and damn near close to third target. So perfect shot here. So there's the straight algo play. So I've got a technical pivot here. So I'm going to keep going. So I'm going to look here, pulling from the 2. Now we had a couple in here. Okay, so here it is yet again, tick to tick. All right, boom, there it is. All right, so here's that pattern that they like. So it's not deep enough here. So here, it's not deep enough to, even though there's a play there, it's not until we get here and they have this pattern that they like, right? They like this alternating pivot. It's the next 50 after you see that. It's almost as solid a trade as you're going to find. It's the first retrace after that, after that little alternating pivot that they like. We do it again. So, well, they got 3, 4 in a row here already. So there's this one. All right, so we've got a technical pivot here. Now this looks like it's gone too far. So you just keep checking. So here we get a break. We get a break here, but it goes 786. So it's technical. So I go back 1. Is it too soon? Well, we know we just caught this one to the tick. So again, there it would be again. Now is this a front run? Hard to say. Very well could be, but certainly you have something technical happening here, because if we look, if this is the front run, they have not made target here. That's a bit far for a front run, but so it may be tied to something on the other side. So when you see that, you got to check the other side and go, well, because they're always going to be there going the other direction. So if I'm spot on there, looks like you went a tick through, but there it is, right? So there they go again. So you wonder, why do they stop there? Well, it's very probable that we don't make the 50 because the algo that's taking profit there starts buying, right? So this is how we know it's an algo. It's the reaction at the target. It's never this. It's always what happens at the target. So I pull again. Now we're 2 and through. So with the break here, you know that the next trade is going to be a buy at the 50. So let's go. Let's just for the discussion here. So here, it's a little tricky here because we don't make targets. So you could either hold here, probably go here thinking, okay, now I've got all the ingredients here. So from the 2 to the 3 here, I don't get the target. So that's still up there. This algorithm has not been stopped out. So if that's a front run, maybe. If not, they definitely bought here. All right, we got a little structure. We don't threaten the 1. So I could go 1, 2. Now it's a little, there is a possibility that the 3 could come over here because it's tough to get an impulse out of this. Where's the 1? You can't go 1, 2, 3. 3 wouldn't be long enough. So I think you kind of back into it and say, okay, well, if this is the 1 and that's the 2, well, here's 100%. So I have a candidate here for 3 now. Could be, if this is going to continue to come down here, that we might have an ending diagonal. So it's hard not to see possibly something like this could be here, as an ABC. It's just we can't tell yet here. We need something to break. So if this is done, if this is the pivot here for the 5, I think there was one more in here if I recall from working in the day trading room. So you got one last one here. We typically in the day trading room work off the 15-minute. So here's golden zone to target. There it is again. So again, how do we know it's an algorithm? Well, it's not what happens. It's not the buy at the 618 and the golden zone. It's the reaction at the target. Right? That enough of a reaction for you? So we don't have to wonder what happened there. We know what happened there. Algorithm takes profit. Down it goes. Talking heads rationalize it. Oh, well, it was earning. Blah, blah, blah. Bullshit. It's an algorithm taking profit. Okay, so we're done. Look at the reaction. Well, so what are we correcting there? It would appear that we're correcting this prior this prior count. So swing low, swing high, because that's now we're getting deep enough. So you've got a reasonable case here for this as an A, perhaps B going in, maybe C. Hard to say, right? So of course you're going to look at it from the other side. It's just one after the next, right? So here it is again. Here's the reaction at the this is a good example. In fact, I traded this last night. Okay, so you get a reaction at the 50, right? And a 2 lot, you pick $300-400 up there. I know because I did. So, but I will tell you that's because yesterday when this was coming down, I was on the buy side and I got crushed. So I hit my limits in terms of what I'll allow for losses in any given day. I was trying to buy here and I was trying to buy here. Just got crushed, right? So I stopped trading at a certain level of loss on the day. So the reason I was looking, so once that started, you could kind of anticipate what was likely to come. Often what they'll do is they'll ramp towards VWAP in the afternoon. This is where we ended the day. You had that little reaction. So around dinner, I was up here, dinner time here in Texas. I was looking for a little reaction there, caught that. You know, not bad. And then you had this. This was early. This was before the market opened. So you had. I think I was a little late on that. So you have this as well, but that target goes unrealized. So this algorithm has sold here looking for this. Well, what would that? You know, nothing's. It's not guaranteed that we get there because, of course, it's always a fib fight between algorithms. Okay, so we've got another algo that's down here, right? That look, you know, it's just. Guys, you know, you have to know about these, right? So especially in the S&P where it's almost all algo driven. Okay, so swing high. So we go up to the 618, little front run on it. We're not to target. Comes down. What do? Exactly to the 50 to the tick. All right, up we go, and then you know, it's in here again. So then from there, all right, from the 50, all right, golden zone again. I mean, guys, it's just over and over and over again. If you don't know about this, I don't know how anybody trades. I don't know how they do it. All right, so let's get that right on there. Okay, so there you go. I was blind till somebody taught me. Right? I didn't discover this, invent this. It was taught to me, just like I'm trying to teach it to you. So we go from the 50. So we've got a perfect tag of the 50, target unrealized. We go up, we come down. What do? Golden zone. Perfect tag at the golden zone. We're coming out of that. Now, are we going to get to target? Well, you know, look as we sit here. I wouldn't bet against it. We may not make it today, but that certainly is sitting up there. So you've got competing algorithms like you do every day, all day in the S&P. So this algorithm sold it here. Well, they started selling here. They defended here. Thereafter, that target that's below. Right, it's down here a ways. Thereafter, this target. This algorithm here and this algorithm. So you've got multiples. Okay, so you've got one algorithm that's here after that target. You've got this algorithm that's here after this target. Okay, so it's just they battle back and forth all day long. All day long. Which algo is going to win? You don't know, but you can anticipate. There's a reaction here at every bloody pivot. Reaction, 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 reaction. Now, do they go to target? No, obviously not always. One of them, one wins, one loses. But that's what they do. They just rotate. You know, we don't know who's behind it. We're never going to know. No way to know. All we can do is search out for the footprint. Once we find it, well, we know what they did last. But you're always going to have competing algorithms on both sides, right? Who knows who's behind them? It could be shit. Who knows, right? It could be hundreds, thousands of people behind it. Don't know. But you can always spot the footprint. It never fails. Well, I shouldn't say it that way. One side always fails, but you can virtually anticipate those reactions. If you're a scalper, I mean, some people come in here, they're looking for 3 ticks with a 100 lot, right? Did you get it? Did you get it? Did you get it? Did you get it? Yeah, every one of them. You can high probability that you're going to get a reaction at those levels, right? It's just don't take my word for it. Go through, pick any asset in anywhere, and just start drawing them up. It'll blow your mind. It's just nonstop, algo to algo to algo to algo. That's all. It's 98% of the market in here, particularly in the S&P. One algo fires after another one. All right, so with all of that established, where are we going next? Well, if this is the A, it's certainly not unreasonable that we could have another. So as I showed you on the larger degree, it's not unreasonable to go to the 786. Let me clear some of this up. get this out of here. So could this be the B? Well, sure, why not? It was technical. We got a kind of an abrupt A, but there's no reason why this couldn't be the B. Now we could do something like this. We could have more complexity in the B. That wouldn't surprise me either. So we go something like this. Maybe that was technical. We go up a little higher. Maybe our B, we're going to go 786 again. Remember, 786, just like a 2, it's always a drive to get to the higher pivot. Do we get it? Well, put the thing together, right? Pivot to pivot. So we get a little target up here. So this wouldn't be crazy. So you got an algo target in the 786. We know this market has been doing 786s on the higher time frame. This was a 786. Right, as I took you back through the other pivots on the larger degree, it's hitting the 786s because we've got extreme volatility up at these levels. It's just not terribly surprising. So how do you know? Well, there's no way to know. You don't know. All you can do is say, well, if it breaks the 65, but remember what the algorithm is going to do. So this algorithm here, if it breaks this 65, the trade that I was just communicating to the guys in the day trading room, if you get this. This is the pattern that they love. So if we get something like this, now if we come up here and we break that 65 to get to that target, the next 50 is a must take. Must take. I can damn near guarantee you that there will be an algorithm sitting there. So if we look at that, if we get that up to this level, the trade that you really want you to consider, if you're comfortable trading in here, is that one. I can almost guarantee you whether it gets to target or not, what you will see is there will be a reaction there, right? So, I mean, just sitting here, so that would be 5 points just if we got from the 50 to the 38, right? You do that, you don't have to do that often, right? To pull some money out of this. Now, where's your stop? Well, if you can afford it, right? Stop would need to be down here. If you can't afford that, you got to do what's appropriate for your account size. So this is not for everyone. You've got to have the resources to do this, to be able to do this. Now, if you want to trade on the larger degrees, you can do this with the CFD. I wouldn't be doing it off of a 15-minute, but you can trade off of the 60-minute, knowing it's going to be, it's not the same as trading the futures contract, but the general patterns will be very similar. So if you want to take this in smaller size, you can do it with the CFDs. I know. I have members that are doing it. Okay, so this going up to that target, not unreasonable, and it wouldn't kill the idea that we had a B still going in. Now you want to wait and see what. So is the B in? Well, it's not much of a C in that B. So even though you have this three-wave structure here, I'm not so sure that we haven't just put in the A of the B. So at that degree, we'd be looking A, B, and then going up for the C of the B. Let me change that. So it would look more like that. That could be the C, and then this would be our B. Let's go up a degree here just so we don't lose track of what's what there. Okay, very unreasonable because we know that algorithm is going after that target. I mean, it could make it tonight, could make it tomorrow. We just don't know. All right, we get positive news on China talks. It would probably blow right through that and go up, challenge those highs. But that's a target, right? So if you're in this, that's the target you're looking for. If you sold this one, then the B is in, and this is mislabeled, then the B is over here. How are you going to know? Well, we got to wait and see, because right now we're just stuck in a giant big fib fight from one golden zone to the next. All right, so so here's the bigger battle, and then you have the 50. Then you have the smaller battle here between these guys. It's every single day, guys, every day, just back and forth. It's just algo ping pong. They do the same thing over and over. One side breaks, you tee up the next one. Now, I'm not suggesting that day trading in the S&P here is easy. It's not easy. But you can. If you don't know about this, you're good luck. I don't know how you do. I don't know how you make a penny. I don't know how you do anything other than if you don't know that this footprint, to be looking for this footprint, I don't know how you're making any money in there. You have to know this is there. You have to know these are there. In my opinion, well, shit. Let me say it that way. In my opinion, you have to know these are here. You have to know where these targets are. You have to know where these are. Again, are you swing trading? Are you looking for 3-4 points? Are you looking for 3-4 ticks? Because this is happening. I'm here on the 15-minute. This is happening on the 1 minute. It's happening on the 30-second. It's happening on the 5-minute. It's happening on the 1 day, the 1 hour, the 1 week, the 1 month. It's the same thing over and over again. It does not change, at least for the time being. Now, they may rewrite these algorithms, but right now this has been going on for, since it was being done on paper. So it's just automated now. That's the only difference. So nothing new under the sun here. Now, who's going to make it here? We'll have to wait and see. So is there a trade here? I'm babbling on here. Is there a trade here? Well, long term, if you go back out to the 4-hour, it's hard to be overly aggressive considering we just repeated a pattern that we did at the exact same time. We came into all of this supply, as I had it drawn up before here, guys. We're into all of that supply. To get through that, well, it's going to have to get through it with a lot of volume, and there's going to need to be a big push. So it could very well be that you get some news on the China talks, and that's enough to kick through. Now you're really looking at this going, is this just the 4 at a larger degree, and all we've done is a 1? Well, at some point, I've got an impulse here. At some point, that's going to start to correct. Right? It's just inevitable. Now, it could keep going, but at some point, and this is a pretty reasonable spot to be looking for it, this is going to start to correct. It just, this motive wave here will start to correct. Where's the likely target? Well, at least 50% of it. So we're in there, back on the 15-minute trying to figure out what's happening on the algos, but on the larger degree, this is the next buy opportunity as far as I'm concerned. If this is going to be as a completed impulse, and we don't know that it's completed, but you're at a high probability zone, I sure as hell wouldn't be aggressively buying up here. My opinion, take it for what it's worth. At some point, there's going to be a retrace. Now, it looked severe yesterday. It looked like we were starting down pretty hard, but it recovered. 25.85, it's not that crazy. Just working off of this swing low to the swing high. So for a trade, I'll tell you what I'd be doing. I'd be selling out of the money calls. That's what I'd be doing in a call spread. Now, we don't talk a lot about option trading here, but because you're going, you've got this raging bull trend here, stepping in front of that, I wouldn't do it unhedged, or I'd have a very tight stop if I was in the futures market. I'd be selling up here. I'd be selling out of the money calls. That's what I'd do. But that's a topic for another webinar, seminar, something if we're going to get into option trading. But that is an option if you know how to do it, right? Of course. Otherwise, I'd be if you're comfortable selling here, or the other thing to consider is this is not a bad time to be hedging up some. If you have exposure in the equities markets, you may be hedging up some of that exposure. Now, as I said, if we get through, this will become this resistance will become the support. So there may well be, if it pops through again, China news, something good happens, and we get that push through. When it comes back, that'll be your next buy opportunity. Until then, I think you got to either hedge up any long exposure. If you're an option trader, you know how to do it. I'd be selling out of the money calls up here, because after this move like this, the premium is going to be rich up here. I'd put on a call spread, right? Take the credit, see if we can get a retrace here, but then I'd be looking long and hard for a buy down here on the idea that I've got a completed impulse. I'm waiting for the retrace at the 50, because nothing says we must have topped over here. We certainly could go again. All right, guys, probably went a little longer than I should have there. Too much droning on. Okay, well, with that, if you don't know how to do this and you want to learn how to build it into an Elliott Wave analysis and market geometry and all the other things that I talk about on here every day, look us up. Right, links underneath this video. All right, we've got a trial going on. So if you want to check us out and make sure it's a good fit, do the 3 days for $7. That's a good way. A lot of people start that way. A lot of people come in. All right, guys, I'll be back a little bit more later. Okay.